I just got off the Interactive Brokers earnings call, and I know Netflix also just posted earnings, but I thought Interactive Brokers was especially important to focus on in this environment of more investors, Robinhood traders, all these kinds of things. I wanted to hear what Interactive Brokers was saying with their view on all of these investors. They just hit 1 million accounts, and there's several interesting pieces that I want to note. For example, they just hit 1 million accounts. Record account openings. They're obviously seeing a massive inflow of new accounts. But of these new accounts, an optimistic sign to market stability and possible future growth is that they're not necessarily seeing a whole lot of margin utilization. So these accounts are being opened. They're getting access to margin at incredibly low rates, but not that many users are using it. I'm an Interactive Brokers client myself. I'm not using margin. Margin can and has, and in the Great Depression did, lead to, over speculation, too much buying in a bubbly environment. When you have margin, people lever up and buy more stocks than they technically are able to buy because they're taking a loan to buy the stocks. The fact that we haven't seen that yet, maybe there are people who are, but Interactive Brokers is saying it's not at the level as it has been in the past, shows us that, one, there is more room to run, but more importantly, two, that people aren't taking unhealthy risks that they can't necessarily afford. So this is good. It's good that there isn't a whole lot of excessive speculation, at least in terms of the actions investors are taking with their accounts. That said, Interactive Brokers volume is up 2.6 times the year before, 2020 versus 2019. That's significant. That's a significant increase. So there's definitely a lot of activity in the market. But, the founder and CEO of the company said something that we have talked about a lot on this channel and agree with, and that's that inflation is coming. And if inflation is coming, stocks just naturally have to increase because their earnings are going to go up, prices are going to go up, and people don't want to have cash. They want to have stocks. So where do I see the market now at this very high level? I see it having a floor. There's this floor of stimulus, inflation, relatively recovered economy. I'm not going to say it's perfect, but, unemployment rate has fallen sharply and there's a lot of unemployment benefits that people are collecting. So there's certainly a floor level for this market. That said, we've kind of pulled forward a lot of gains. Typically, when there's a new president, we'll see some sort of gains, but we saw those gains very shortly after the election concluded. So I don't really see a good case for those gains to continue. That said, there's some areas of the market that are still very attractive. Real estate, maybe the airlines, gold, certainly. Those areas of the market I could definitely see continuing to run, but seeing growth stocks continue to run, I don't know. It's kind of skeptical. Yes, JP Morgan said big cap tech deserves to run. I like companies like Facebook, honestly. And I can see some improvement in those prices, but nothing crazy. So the overall message here is, yes, we can go up. We can go down, but not past a certain level. So I would still be looking for good prices. I wouldn't just be kind of grasping at anything that comes your way. I would be looking for good prices, not saying the stock market isn't high. But given that inflation is likely and margin utilization is not particularly high, there is still ammunition and fundamental ammunition for the market to continue rising and for speculation, I guess, if you want to call it that, to continue. So we will see what happens. Right now, I'm just kind of looking for good prices, holding on to my positions, and allowing the winds to move the sailboat. So until next time, peace out.